Robschild, no investment advice. Welcome to the show where we view the financial markets using Benjamin Graham's investment philosophy, macro technicals, and a touch of crystal ball gazing. Today is Wednesday, May 21st, 2025. Today we begin with our episode with our headline, Week 20-Year Bond Auction. Around 1 p.m. today is the reason why TLT dropped pretty significantly, along with most stocks. Pretty much everything went down except for Bitcoin and Fartcoin, which are now safe haven assets, and gold. Those things went up, and everything else went down at 1 p.m., including emerging market stocks. So it was just like everybody was just flipping their lid over this 20-year T-bond auction. The winning bid was a lot higher than people expected. For the yield was higher, so there wasn't a lot of good offers, and so the entire market went a little haywire today. We'll take a look at some specific things going on in the charts when we get there. Before we do community topics, I wanted to ask the community, do you like the new banner on the channel or the old one better? If you noticed, I changed the banner recently to be a little more modern. Let me know in the comments if you like it better or not. Also, what did you do today? Did you make any changes in your portfolio? Robschild actually bought a good deal amount more of TMF, which is a leveraged form of TLT. And I also added to my Ingalls Markets. It's a supermarket stock I think is undervalued. I added to that today. Coming up, as always, continuous tariff updates on what the federal budget's going to look like. After Mr. Burns got shot, he decided to block out the sun with a giant disc. Trump unveils plans for Golden Dome missile defense systems. So that's a part of the federal budget plan. But we're still waiting for more clarity on what is going to come out, what's happening with that. Then we have also tomorrow initial continuing claims, which really could rock things around. Like I keep saying, every one of these weeks is going to really shock markets in my estimation, with my crystal ball and all. We also have flash PMIs coming out tomorrow. As always, thank you for watching, subscribing, commenting, and supporting. The subscription buttons right over here. No changes in the daily reminders macro views. Click my website in the description to read through my explanation of these things. Also, no changes in the crystal ball ratings. Robschild portfolio I added to long duration treasury bonds today. On to the charts. The first chart I want to bring up today is actually the 30-year bond yield, which did spike today. We closed at 509, which happens to be, I believe it's the highest. The reason we closed on 509, it's the highest close that we've seen, that we saw in this whole cycle in 2023 when we had that spike all the way up here. The highest close was exactly at that same level, so we could potentially be at a double top in the 30-year bond yield. Maybe not. Can it go higher at this point? Yeah, I guess it could. If I was sure it would, I wouldn't have bought more TMF today. I would have waited till tomorrow, so I'm not sure where we're going from here, but it is notable that we are at basically a double top here. Looking more carefully in 2023, we did have one close at 5.10, so 1 basis point higher. Still counts as a double top. Robschild, you were wrong. You're losing all this money in treasury bonds. Maybe I am. I mean, at the end of the day, guys, this is just a game, and you can't make a lot of money if you don't take risks sometimes, and this seems like the best opportunity to me. It still does. I am doubling down here. But one thing I wanted to bring up about the 30-year bond yield is back in 2006, 2007, what was going on. Greenspan, back in these years, came up with a phrase called the bond market conundrum, where Yields on the front end were high, but the long end wasn't going up. It just wasn't going up. It was refusing to go up. And then in 2007, when it finally did go up, all the way from 4.8, well, let's call the bottom in 2006, 4.5, and then peaked in June of 2007 at 5.4% yield on the 30-year Treasury bond. People saw this as sort of a normalization, like finally yields were going back up to a normal place where they sort of should be. But look at what happened right after, violently correcting before finding just like way deeper lows. The lowest being 4.1. Oh, no. No, not 4.1. We keep going lower. In the bottom of the Great Financial Crisis, we get down to 2.5% on the 30-year Treasury bond yield. I'm not expecting it to necessarily play out exactly that way. I have a suspicion it will play out even more violently to the downside. I think that I'm the only voice you'll hear out there still expecting negative rates coming. Largely because of demographics. The super long, deep yield curve inversion that we've had for 2.5 years, and all of the asset bubbles that we seem to be in right now. I mean, you can look through my website again to read through my understandings on that, but yeah. If you're a bondholder like me, you're shaking in your boots. Your bonds have just lost a bunch of value. A bunch of price for today. That's the price people are willing to buy. Now I'm buying it. I'm buying more of it right now, and we'll see how it ends up panning out. Anywho, stocks didn't act as a safe haven asset. The S&P 500 dropping by 1.6%. The VIX going up notably above 20. However, the futures term structure not back into backwardation. We are still in contango on the front end of the curve here. TLT, yeah, I'm going to say it, my favorite place to be, as much as it hurts on a day like today. Yeah, TLT dropping by 1.7%, the lowest that we've seen in years at this point, back into this all-time low range in 2023. I wouldn't be surprised to see a snapback the other direction literally tomorrow. I really don't know. Overnight, people might... people that are selling bonds right now, they're selling them at a loss. No one is selling treasury bonds right now and saying, yeah, all right, I made lots of money. This is a distressed asset. And when things are distressed, that's when they become attractive. When nobody wants stocks, when they're selling stocks at a loss, that's a distressed asset. When they're selling junk bonds at a loss, that's a distressed asset. Right now, treasury bonds are a distressed asset. People are selling them at a loss. Which is why I can comfortably buy them still. I don't know if I don't know if the yields are gonna keep going up or if it's gonna keep going down or not, but I suspect without bias that we are likely to get a snap back the other way. Today is probably priced in all of the fear into this so far, I think, but I don't know. We might get some paper hands in the bond market tomorrow to continue selling bonds off, but I guess we'll see. At this point, the way that I look at it, the lower that it goes, the more attractive it becomes. The higher a yield is, the bigger the coupon payment is of the bonds, the more attractive it becomes. So believe it or not, I will. If this continues lower, I will continue to be buying more TMF. Before we go on, very important, I say this on every single show, no advice. Robschild does not give investment advice. Everything you do is your own responsibility. I'm here just to entertain you. All right, moving on, the next chart. The MOVE index, with TLT dropping by 1.7%, you might expect the MOVE index to be spiking to holy heaven, and it went up a mere I mean, percentage-wise, 0.72%. This little tiny green candle here barely budged. Pretty wild that the move index is not pricing any volatility, signaling to me that this is signaling to me additional evidence that this sell-off in the TLT is likely to be a immediate reversal tomorrow. The move index sort of suggests that, at least that's how I see it. Credit spreads widened today. People actually sold, junk bonds lost their luster a little, not even a ton today. Like I said at the beginning of the show, Bitcoin over the course of the day is up now 3%. We hit all-time highs, by the way, middle of the day. Let's see. Higher than when I last checked it. So 110,730 was the high of the day. Also, Fartcoin going up by almost 10%. Obviously, a safe haven asset for those of us that are actually smart investors will be buying Fartcoin hand over fist. And we have gold also edging out. Today's candle went up by 0.77%. The dollar, as expected, dropping, but not dropping as much as you might expect. If we have like a run away from the dollar in general, if we're really scared of treasury bonds, and we should be scared of the dollar in this scenario. If that's the reasoning here, the dollar should have dropped a lot today, a lot more than TLT in my estimation, and it only dropped by 0.3% today, very interestingly. And then crude oil also falling today. Yields, again, typically follow the price of oil. So oil is in disagreement with the yields going up. Oil's like, I'm going to go down. The way I'm going to paint the picture in my head is just, risk of stocks and all assets losing value, so people have less money. People will be traveling less. This is, again, crude oil is like, we're in a range of price that we haven't seen for since 2021. We haven't been in this price range in crude oil. This is still screaming that there's a major slowdown coming ahead, and along with the slowdown, yields will go down. They're not just going to keep going up. I don't think they can, but remember, you're watching a guy that has a pet dragon named Drakmar and crystal ball. I mean, maybe I don't know anything. Maybe I'm crazy, but anyway, moving on. It's always good to check in with Dr. Copper with a PhD in economics. Is he worried about the dollar losing value to the value of copper? What's going on here with copper? Copper is look at these candles. That's for these always update. So anyway, we went down 0.3%. These tiny little candles. Copper's not moving, not budging, not a little tiny bit. Next chart I want to bring up. SOFR rates actually continuing to collapse, only 2 basis points away from the Fed floor of the Fed funds target. Institutions continuing to not lever up here. Like Dr. Copper, perhaps waiting for something more legitimate, more real, that may have real effects on things. And last chart of the day, the 10-year break-even inflation rate. If the dollar was going to really, if bond yields are signaling like inflation's going to run away, you'd see it in the 10-year break-even inflation rate. And today we went completely flat. This thing didn't budge not 1 inch. Sticking at 2.35% expected inflation priced in to this market as the expected inflation rate to average over the next 10 years. So that's all from me and my crystal ball. I hope you enjoyed. Thank you for watching. Stay safe, stay strong out there, fellow bond kings, and see you next time. Robschild.